Tesla just launched the affordable Model 3 and Model Y, and the market is all over it. And a lot of people say they are totally disappointed and are pointing fingers at Elon and Tesla for not dropping the price of the Model Y more than these $5,000 that they dropped it. Now, what is going on? Is that actually a problem? Should we be super disappointed? Or is Tesla actually on the path to sustained and total domination of the EV market? That is what we are looking at today. So as you know, yesterday, on Tuesday, Tesla launched these new affordable models, and one model that didn't get enough attention, in my opinion, is the Model 3. Because the Model 3 is at $36,990 now as the standard rear-wheel drive in the United States, but they will come to the entire world very soon. So what does that all mean? Let's take a look at the stock price and what is happening to the stock price. So today we have another tiny little down day, but we see the stock stabilizing at 433, and we see what happened here. So on Monday, we jumped up like crazy from 430, exactly where we are today. We ran up all the way to 453 on Monday night before the announcement. And then on Tuesday, the stock dropped a little bit, then went up again. But in total, we saw a disappointing Tuesday where it sold off right here from 448 when it was announced that the model has launched, and we saw on the website the prices. Look what the stock did from 448 all the way down to 430. And today we are just lingering around here. I think the stock right now is finding the right equilibrium. But does that mean that investors are super disappointed? Well, first of all, clearly not, because if they would be super disappointed, the stock would not be at 430, where it actually was before that run up on Monday. So I think it's a neutral perception. People are saying, well, great, now we have this thing. Not much to see here. Probably the normal course of action for Tesla to get the prices down a little bit after the tax credit expiration September 30th. But I want to point something out. I want to take a step back and I want to think about what Tesla, the company, Tesla, the stock, and Tesla, the story is actually all about and what role these affordable models actually play. Now, to understand that, we have to understand that Tesla has basically three central future revenue streams it relies on. The first one is its core business, which consists of the electric vehicle lineup and energy. Now, energy is growing very fast. The electric vehicles took a beating, the business line. But let's forget, not just for Tesla, but for the entire industry. Tesla is actually performing pretty well and above the industry in terms of profitability and everything, actually a lot above the industry. And the entire auto industry took a complete beating from 2021 to today. Hey, creating these videos is a lot of work. Please like and subscribe. It really helps out the channel. Now let's get back to the video. So the second big and important revenue stream that is just coming up right now is robotaxi and the introduction of autonomous vehicles and autonomous transportation infrastructure to the world, which is a multi-trillion-dollar margin industry. That, in my opinion, that second revenue stream alone will catapult Tesla to 10x of where it currently is. And then third, of course, the Optimus robots, the humanoid robot labor platform, where Tesla has a clear lead in the world. Maybe not clear to everyone, but clear to me, maybe clear to you. And it will become very clear down the line, probably this year, that Tesla has a complete lead in the humanoid robot space. And these three revenue streams are the Tesla story. That is the story we are investing in. It is the story of embodied AGI. Tesla is the company that leads the world in bringing AGI into these embodied forms that can transport you all over the place for less than $1 a mile. And that's already happening. And we're just waiting for the dam to break to bring this rapidly to everyone in the United States and then very soon to everyone in the world. The robots are coming too. I will have a video out on that tomorrow because there are tremendous things happening. Also with Figure 1, by the way, who just released an amazing demo and tomorrow will reveal something amazing probably. Figure 1, a competitor of Tesla, if you want to call them like that. But Tesla also hinting at some major things. So that's happening. These are the two future revenue streams that, in my opinion, have a high likelihood in pulling the stock up to the moon, maybe even to Mars. But what is the role? And now we're coming to the affordable model launch that we just saw. What is the role of the cars, the autos, the EVs? We know that Elon is not paying too much attention to them. Elon is really into the two future revenue streams, but Tesla as a company is really paying a lot of attention to the cars and the energy. Now let's take a step back and understand where the auto industry is today to really understand these affordable models that Tesla just launched and what they mean. The auto industry is split into two central markets right now. One is EVs, electric vehicles, and the other one is ICE cars, internal combustion engine cars. And nearly all automakers are dabbling around in EVs. New Chinese automakers like BYD and Xiaomi and others are heavily betting on EVs and are much stronger in EVs. And conventional ones, the old ones, the legacy automakers in Japan, in Germany, and the United States, they are all about ICE vehicles. They are dabbling around in EVs, but they want to get out. Now, these two car markets, ICE and EV, they both have tremendous problems right now. And that is very important to understand my conclusion of this video. The ICE automakers are the only ones, some of them, who are really profitable, like Toyota, for example. And even Mercedes-Benz. They are bringing in a lot of profit with their ICE cars because this is a highly established business, and the best companies in the world like Toyota and Mercedes and some others, they're very good in this market and they really know what they're doing, and there is no real competition for them in the ICE market. But they have a problem, and that problem is that the internal combustion engine is on its way out. And maybe some of you are big gasoline fans. I kind of doubt it, otherwise you wouldn't watch my channel, but maybe some of you will like it, and many people still like it. And I don't want to be ideological about global climate change and all these kinds of things. But on a purely technical level, the problem of ICE cars is that they are fundamentally vastly inferior to electric vehicles, just in their foundational makeup. The engines can't perform at the same level. They are much more complicated, more expensive, lower performance, much more complicated energy infrastructure they need. Of course, that infrastructure in the form of gas stations exists, but it's a mess when you think about it. The energy efficiency in EVs is like 70% conversion from the actual raw energy into force. With ICE, it's a disaster because you have to ship the gas to these gas stations and do all this stupid stuff. And ICE cars just generally suck. They're kind of a joke. They're a technological joke. They can't drive fast. They can't accelerate. They're terrible how they are sitting on the road. So they're just crap, unfortunately, right? They're just inferior. So all of that means that ICE cars are on their way out because consumers are going to say, if I can buy for the same amount a car that, costs me much less and performs way better, I will never buy an ICE car. And now we are exactly at this inflection point where EVs actually become cheaper than ICE cars, thanks to China and thanks to Tesla. So ICE cars are absolutely on the chopping block, and I do not think that in 2030, there will be any ICE company left. These people will get completely destroyed. So it's not good to be in this business, but the best ones in that business are still profitable. Okay, let's talk about EVs. What is happening on the EV front? I had a video out a few months ago, and I predicted that in 2026 and 7, we will see a complete flame out of the electric vehicle market. They have a different problem. Their problem is EVs might be the future, but China has built complete overcapacity. China has created a deadly competitive situation for these companies that hits the entire world, that wipes out all the other EV makers outside China. But don't forget, it also wipes out everyone inside China. No one can get out of there alive. There are no margins. They're all structurally unprofitable. They are subsidized by the Chinese Communist Party, which makes them actually ineffective businesses. And they are suffering, these people. Of course, companies like Xiaomi and some others can cross-finance it from other business lines they have, where Xiaomi's amazing. And of course, these cars can be amazing, but they have a structural margin problem. Look at BYD. It's a disaster. BYD was hyped as this big thing. It's a total disaster. So where does it leave Tesla? Well, Tesla is the only company in the world, just looking at the car business, that is highly profitable with 15% plus gross margins, that can manufacture these things endlessly on a massive scale. Tesla is the largest EV manufacturer in the world, has the largest best-selling car in the world, the Model Y, and then the Model 3, which is not far behind, and it can do so without subsidies at a profitable gross margin. And what does it all mean for Tesla? Well, Tesla uses this automotive market, this EV market, where Tesla is completely dominating when it comes to financials and scale. Forget all these PR things like, oh, there's a BYD, there's a Xiaomi, who's better, blah, blah, blah. It doesn't matter who's better, faster, something. What matters is who makes the money. Because if you come up with a car and you lose money on it, you will die. And if you come up with a car that everyone wants, like the Model Y, and you make tons of money, you will thrive. The EV business, the EV and energy business of Tesla has only one purpose. It is the boot loader for the age of embodied AI. It is a giant cash machine that pushes cash into Tesla and allows Tesla to do R&D, to do scaling, and to pour so much money into robots and autonomous vehicles that no one can compete. That is the purpose of Tesla's car business and nothing else. And if that's the case, if Tesla already is uniquely positioned in that Venn diagram between not being ICE, being EV, but inside EV, being the only company that is actually profitable, what does Tesla need to achieve with this affordable model launch? Not what many of you thought, oh, let's dominate the market, let's cut into these affordable models and just expand our TAM as quickly as possible. That is not the strategic mission of Tesla's EV unit. The strategic mission of Tesla's EV unit is to keep doing exactly what they're doing, make tons of money and keep making tons of money. Because they're doing very well and they're doing exactly what they're supposed to do. And here is the chart you need to understand. Here is the chart. I created this chart with my magic Paint, Microsoft Paint capabilities, my secret technology, how I stay ahead of everyone. It's called Microsoft Paint, the most advanced graphics program in the world. And with that graphics program, I'm drawing these lines, okay, to show you something. So here's the underlying chart. And this underlying chart is by ARK Invest. And ARK Invest showed here is the TAM, the percentage of TAM in revenue in the EV market. And here is the selling price of these EVs. What it tells you is that once you get here into the 40,000 to 30,000, here's green is 40,000, red is 30,000. And here you see the market share as a TAM of your car. So this is all a function of affordability. And what you see is it goes through the freaking roof once you cross the $35,000 line. If you can sell an EV under $35,000, your TAM explodes and eightfolds. That's what you want. Because right now Tesla was here at 45,000 for the Model Y. Now, what is the job? Is the job to eat into this affordable model market and just eightfold the TAM? No, that is not the job. The job is to make money and keep making money. It is incredibly difficult and hard to cut COGS, the production costs of a car, keep making money, and lower the price. And what Tesla doesn't want to do and doesn't need to do is what the Chinese do. They rush into the super big market here and get slaughtered because they lose money. Look at BYD. What Tesla does instead, what does it do instead? Well, it's very well positioned right here at $45,000 for the Model Y. And it has now shifted with this green line, that thing, the starting price for the Model Y, to $39,900. So it is shifting this to the right. It did the same with the Model 3 from $42,900 to $42,900 to $36,900 purple line. And now many complain. Many of you complain. Here is the red line that is 35,000, and here is the 30,000 line, and Tesla missed getting into this line. I said they should get to this line and then they would, multiply their TAM and everything, but they failed to do so in this launch. And here's why it's not a failure at all. Tesla is very happy with where they are. They are printing money. The rest of the industry is imploding. All they needed to do is shift these lines to the right and move towards this $35,000 target. And they did so. They probably doubled their TAM or something with the Model 3. They are now approximating this inflection point, but they're not there yet. What they did is they put margin interest over rapid TAM expansion. Who wants to rapidly expand the TAM if you just want to cash in and keep cashing in and have that march towards this 35,000, the relentless march towards 35,000? while protecting your margin. It allows them to stay focused on autonomy, on robotaxis, and on Optimus. This move ensures that they will see increasing demand, incrementally increasing demand, without compromising the margins. And over time, now they're like $2,000 away from the $35,000 inflection point. In New York State, for example, they already get $2,000 off from incentives. They can get the same in many other states. In Europe, in France, there are all kinds of incentives where you get actually more than enough money to push it across this finish line. And that is the big secret here. Tesla is in no rush to do anything. They made the right move. They shifted down the price $5,000, which is significantly. They probably did it without any impact on margin because they were able to cut out 4,000 or something out of the COGS. The rest is, absolute margin versus relative margin. And there you have it. So we should all take a deep breath, all put it into perspective, and understand that Tesla did exactly what it's supposed to do. Continue on the winning lane. Continue by maintaining your EV supremacy, by shifting the price $5,000 and continue on this path. No need for disruption. No need for some crazy TAM explosion. The only need we have is keep doing what you're doing, deliver the dollars rolling into my R&D for my autonomous robotaxis and my Optimus. That's exactly what they did. The inflection is coming very soon in 2026 probably. And then all of that won't matter anymore because we will achieve complete and total domination of embodied AI. So I hope that was helpful. See you very soon.